Yo, what's good, boys? Episode 2 of Working on Psychology. Today we've got two chapters that we're going to talk about. We're going to talk about one from one of the guys in the Discord, and another which is a video I was watching last night, and I just wanted to show like the diversity of how trading is, and the importance of candle closures. Um, which is sort of the same thing. Um, the main point is like how different trading is and how you got to stick with one thing, because I'm going to give my opinion on this guy taking a trade on this video. However, that's not the way I've learnt it, hence why I've got a different opinion to what he's seeing. But I still wanted to just talk about it anyways, and just for a lot of the guys that do trade how I trade, or even are learning French as SMC, which is what I've recently put out to the guys on the Discord. The importance of candle closures and the importance of wicks. But yeah, so we're going to start off with the first topic, which is how can we stay mentally disciplined when in drawdown. Now, the main thing that I've used that's eliminated all aspects of me being emotionally attached to the money side of trading, because it's very easy to do that. It's very easy to associate trading with the money, and people that don't understand how trading is and how it's a hard skill to master, all they go on about is the money side. When you getting money, you ain't getting money yet. They don't understand you have to put in the time, taking L's, taking lessons, because there aren't losses as long as you turn them into a lesson and you learn something. Taking lessons after lessons, refining lessons, backtesting, collecting data. But the main thing is very simple, and it's going to sound too simple, but that is literally the key, and it is working percentages. Now you're probably thinking, I do that. I calculate my lot size. Okay, cool. But you're still worried about the money side. You just got to work out, right? If I risk 1% and I lose that trade and now I'm negative 1%, am I going to want to risk another 1% and then be 2% down? No. Or even like, well, let's just say 10k account. I'm £100 down. Like, so annoying. Doesn't matter. Literally doesn't matter. Same with when you're on the bigger accounts. You want a mil funding. I say a mil because I just did a back test on a mil. I made 20k obviously from a 2R, which I always do. Doesn't matter. The skill is still the same. You're still doing the same thing. It's just you've got bigger capital. But the main thing is working percentages. If you are not comfortable with going 2% down, don't. If I risk 1% on the first trade and I lose it, cool. I know my fixed 2R, I can get that back. So even if I risk 0.25, make that, and that's half done already. That's halfway back. Then I can risk another 0.25, and then it's halfway back again. That simple. If you aren't comfortable with losing after you've applied working in percentages, risk less. Risk less. You have not got a risk. Just because you're 3% down and you think, if I get 1% risk, make a 3R, I get all that back. No. Because what if you don't win that trade and then you're 4% down? Then you've got 1 more percent until daily drawdown. Or you've already hit daily drawdown. Max total loss, sorry. Because you've hit your 4% or 5% or whatever the rule it is. So if you were not comfortable with losing however much percent, risk less. Literally as simple as that. And I wanted to go over this more, which I'll do it in a couple more episodes. I have a proper psychology video out, but simple as it is, I literally just chatted to the guys. I was like, yo, what do you want to see for the psychology vid? And one of the guys put in, how do I keep strong or something with when I'm 4% in drawdown. So cool. I was like, let me jump on. Let me make a quick answer for you to take that in and listen to what I said and maybe apply that. Or if you don't think I'm right, do your own thing. And that's the same with everyone. Apply it or don't apply it. I'm not charging because this is just my way of trading. My way of trading isn't going to affect the market. So why would I not share it for free? Makes no sense. But yeah, I thought I'd jump on, do a quick psychology vid to answer that question, and then later down the line I'll have a more structured out video for psychology and stuff like that. So yeah, that is the psychology aspect. And to summarize, if you aren't comfortable with losing a certain percentage, risk less. Simples. You ain't got to make back all that lost progress, all that drawdown in one trade. You can build that up, and that is where real traders get made. You build it back up and up and up and up to get to break even, then you start again. Simples. But yeah, the main aspect, working percentages, and if you're already working in percentages, risk less. If you know that if you mainly get 2Rs with your strategy, or you have a fixed 2R target, like myself, I know if I'm 1% down, I've only got to hit 2 trades, risking 0.5. So I could also eliminate that risk again. And instead of being 1.5% down, if I risk 0.5% to make back that 1%, I could then eliminate that risk again and just risk 0.25. And then I've only got to make 2 trades to get back, instead of me making it back in 1 trade. So yeah, just risk less. Literally work out what RR you want to use if you have a fixed one like me, or if your trades usually get a 2R, 3R, 1.5R, work around that. Split your risk, maybe split your risk again, because that's where the psychology comes from. Psychology doesn't come from winning the trade. Psychology comes from the potential of losing. So if you're risking less, you won't care as much about losing it because it's not relevant. That's like when I was trading the 1551 model and I was 4.1% up or 4.14% up. I'd risk 0.14% and not really care, because I'm not risking all my progress. I'm risking a slight thing. And for me, I like working in even numbers. It makes it way easier. It's just me. I like having it all even. So me being up 4.1%, if I risk 0.14%, I don't care. I'm still up 4%. But it turns out I won that and now I'm up 4.28%. So I could even just risk 0.28%, go for my 2R, and then I'm up however much percent. So yeah, literally just risk less, work in percentages, split your risk into how much RR you usually get, and split your risk again, depending on how bad your psychology is at that current moment. If you're scared to take trades, risking 0.5, you ain't got to risk 0.5. Risk 0.25. And if you're still scared to take that trade and press that button, you ain't got to risk 0.25. Risk 0.125. Simples. There's no rush. All these prop firms are now unlimited days. So why are you rushing? Why are you rushing? You ain't got to rush. There's unlimited days. I've had my 6K account for like 160 days now. And that's not only a credit to my discipline, that's a credit to how committed I am to not rushing. You ain't got to rush. Why do you need to rush? It's unlimited days. You can take as much time as you want. There's just this concept behind passing quick, getting your payouts. I know, like, with my example, it's a bit much because it has been a long time. And I'm going to log in whilst I'm chatting just so I can show you. It's been a long time. And you can't even see me. So let me just wait till I get this page back and you can see me. It's been a long time. But it doesn't matter. And granted.
Alright, what is good, guys? Welcome to One of One.
Cheers, TGR. It's been a long time. I'll show you it on the dash. Let me just log in quick. I used to trade my old strategy. I used to trade the strategy I trade now, but without the experience. So I didn't really know what I was doing. And then I had a brief period. I got one trade, won it. Another trade, won, and then I think I lost. And then it's not showing it because it's a fresh account. But yeah, I was literally on like 144 days the last time I checked. So that must mean I was on 160, because the reason it's fresh because they've just updated to V3. But you ain't got to rush. Take your time. If you ain't comfortable losing whatever percent, just risk less. Even to get your psychology back. Because there's going to be times when you're in drawdown. It's going to happen. And nothing changes when you're in drawdown. The strategy stays the same. But your mindset changes, and that is why a lot of the time you then try to switch strategy because you think, oh, it's not working and I'm in drawdown, let me look for the next best thing, which is what I did. I literally was there. I traded TGR, then I swapped because I didn't take any trades for like months, and I went into collecting data for this other model, which was decent, it wasn't bad, and then I'm back to how I used to trade. I've just got the screen time. And with what TGR literally said in his trading transformation video, pick one strategy, trade it forever, don't switch, blah, blah, blah. And it's true. Because imagine if I hadn't have changed strategies and I've just kept on doing what I was doing. Wonder where I'd be. Would I be funded now? Who knows? Who knows? But yeah, hopefully that answered your question, or if anyone else is in the same boat. I know it's literally been 12 minutes, but I want to do a more in-depth psychology video. And I'm feeling a bit better now. I was very ill this morning and the last couple of days, so that's a bit of a late upload, but yeah, thought I'd come and answer that quick, and then I'll do a more structured psychology video. But yeah, my second part of this video is the difference between, like, it's sort of just like the art of trading, and then it's also like what went wrong for this guy if he was trading my strategy, which he isn't. He's trading supply and demand. So yeah, I'm just gonna put it down here because his trade's up in the top right. So in this example, I'm not gonna watch 8 minutes of this. I'm gonna put it down a bit. Essentially, he's got his order block, or supply, whatever he wants to call it, right there, and he's entered on, not really sure what he's entered on, because this candle hasn't closed yet, but we're going to watch it and I'm going to stop and explain that. So in this chart, we can see if we're trading franchise SMC or SMC like TGR, we can literally point out this low, because what is a low? Move down, move up. That's the lowest point, that's a low. As you can see, this low gets broken, so you've got a breaker structure to the downside. This would be our high, and then this candle, when it closes in 2 minutes, will be our new low. So we'll have equilibrium from here to here. So the likelihood of this coming up here to then continue further, if it wants to continue bearish, it's quite high, or it can literally just keep running until it wants to set equilibrium again. But yeah, we'll just watch. Also notice this bearish fair value gap, mainly because this guy mentions about how he likes the upper wick. Now, the importance of wicks trading my strategy is, a wick is not a candle close. A wick tells you where price was, doesn't tell you where it is now. So him saying he likes the upper wick presented, that is not relevant because it's just showing a rejection of this area, which I think he knows imbalances and fair value gaps, but if he doesn't, and if you're watching this or whatever, this is just showing a rejection of this fair value gap. So yeah, technically in 2 minutes we'll have equilibrium from here to here if it closes with an up candle. So yeah, let's just watch.
I just like the fact that it's even presented an upper wick, because now we're finally seeing that there is buying power in the market.
Buying power in the market is not a thing. It's an algorithm that is built to target highs and lows and rebalance price. Like I was saying, there is no buying and selling pressure in the market. It's an algorithm. And this wick is literally just showing a rejection of this area. If he understands fair value gaps, not sure if he does, but yeah.
Presented an upper wick, because now we're finally seeing that there is buying power in the market, and small lower wick. I think we're taking over with the sentiment.
Taking over where? You broke structure to the downside and you're trying to long. You only break a structure to the upside, that would be classed as a takeover, is this high if it closes above. And I've actually just noticed it says break a structure here, so not really too sure why this hasn't been mentioned. And it's a 5-minute break of structure as well. It's not like it's a 1 minute that's irrelevant. And we can also see this bullish imbalance being rejected, and it's closed below. So the next real target is to rebalance up here. Got a gap there. If equilibrium gets made, could come up to 50%, and then it will target this low.
I'm just going to remove this box. You see my entry, I just want to see candles better. So, I think that was the line I meant to... There you are. So pushing above entry price, which is always a good sign. What's going to make me really confident is on the next candle in 30 seconds is obviously a break of this candle. Because then, I would see breaking to the upside.
So he's got a breaker structure in his watermark, but the only breaker structure that would be valid is this high, and the recent breaker structure is this low, so not really too sure, but
preferable. It's very jumpy right now though. Seems volatile, but it's not going in either direction. It's just tweaking. I don't like that candle.
It also hasn't gone back to trading view, but as you can see now, equilibrium has been printed. Can't really see that well as it's easy to see on trading view. As you can see the numbers, I can sort of get a rough estimate of where 50% is, but yeah, equilibrium's now been printed, so it's got the option to either come up to here. The only imbalance I can see is there. Probably the sum on the 3 minute or the 1 minute, but realistically price could take this low now, as there's no other imbalances from this 5 minute equilibrium.
Open, but gonna have to see it through.
Okay, cool, so we can see it now. So that's about 187,960, and that's about 187,810. So the waypoint is about 900. Yeah, about 900. Probably on a smaller time frame there's a gap, but I can't really see any, so it's probably just going to run for this low, make new equilibrium, and then continue. As you can see, from this low to this high, comes into equilibrium, comes into this gap, continues pushing, break structure here to here. However, we closed through this gap now and broke structure to the downside. Yeah, I'm just talking on what he's trading.
If it breaks candle to the downside, I may look to close out and look for a re-entry if it doesn't invalidate zone. So then I can just minimize, you know, like potential losses. Doesn't look like that's gonna happen. We can hope. As for
I
waypoint,
take it when he says break of candle, he means it needs to close past that wick. I think. I don't know.
ooh. Okay, I'm gonna get out there. I'll wait for another break of candle on this candle.
Okay, so he does mean that.
Just up here. There seems to be a lot of downwards pressure.
There isn't downwards pressure, that's not a thing.
And I'm not trying to take a full 0.5% risk. I think it's quite a
That's valid. That is valid. I rate what he said there. Cut your losses, especially if I mean, in his terms, break of count, I don't know. For me, I would not have been long in here. Obviously, I don't know the hourly and the 4 hour and the daily bias, but just look from what I can see here. Yeah, it is bearish from this break. Disrespecting, bullish, order flow. Well, I'm not trying to be one of those guys that watches the video and chat, but these concepts apply to any chart. I can literally look at any chart and tell you what I'm seeing. So yeah, I mean, even with this is a high, low, that's the high, low, high, equilibrium gets formed, price comes up to this gap and continues lower. Don't think that breaks actually, so we make a new low here with a new high here, breaks here, equilibrium from here to here comes in, continues down, and then it gets a bit messy because I can't really see his chart, but yeah.
clear pace to cut, you know, like cut losses. Sorry. So yeah, we'll see for the re-entry. Risking 0.5 was probably the move there, just considering the volatility downwards.
I mean, there was not much volatility downwards. It was just continuing the trend. But yeah.
Like I said, I'm getting in if I see another break of candle up here, but if it breaks down, what I mean here, that.
Yeah, so he does mean the wicks. Okay. I mean, that's how he sees it. And this is why trading is so beautiful in a way. There's so many different ways to trade, and there's so many ways to be profitable with different strategies. It's so beautiful. So I'm not trying to mock this guy. I'm just applying what I've learned to his charts. So yeah, if you're watching, probably not. But do not take this as criticism, as I don't know your strategy. You get it? I don't know what you know, and you don't know what I know. So let's not cross paths, and let's just keep pushing. So yeah.
That would invalidate zone. If either one of these get hit, then that's going to be the turnout for this trade. I think quite a lot has happened, so it's still maybe a live trade. Even if I don't take, just cutting that loss and then waiting for another re-break. I mean, risking 0.5.
One thing added on to psychology, which is what you just watched. Don't re-enter. Because if you, say you lose 1%, okay, you're now desperate to make that 1% back and profit. And then you lose 2%. And then you'll kick yourself. Why didn't I just cut my loss at 1%? So I do rate him cutting losses when he's wrong. Do not re-enter though. Horrible for psychology, but carry on.
I managed to cut loss at like a 0.35% down, so. This is what I kind of expected, considering it is the Monday of NFP week. I don't have very high hopes for this week, but hope we can catch a couple dubs. And if I keep this discipline, then I believe that is very likely. We're seeing bullishness in this candle, so.
Just quickly, this is the new high, and then depending on if this is an up candle or not, this will be a new low. So for price to break back up in his bias, it would need to close above this high. And yeah, we are in the 5 minute, as you can see right here.
Yeah, so that would have been stop loss hit anyway. Managed to cut loss just.
So as you can see, obviously it hasn't closed now, but as this candle is not an up candle and it hasn't closed yet, this is the only low we've got. We've got this low because it's a low high, and this is our high, it's a high low. So if this closes below here, we're continuing our bearish order flow.
Seeing all of that downwards momentum present, so I'm fine with that. I think that will.
And to be fair, I'm not gonna lie, him getting it wrong, cool, but he entered here and there wasn't really much. Obviously, if he just shorted in this gap right here, maybe stops here or something like that, then he wouldn't have been affected really. But I mean, I would have probably, I don't know, I don't know the daily 4 hour and 1 hour, but I'd probably look at this gap. This candle wouldn't have been enough for me, so I'd have probably entered maybe after this candle
be me done for the day. It's even invalidated the zone. Yeah, all in all,
depending on how it closes, by the way.
It was a very nice setup, and I mean, even how it played out, it could have gone much worse. It's just never preferable to take a loss, you know what I mean? As far as the news goes, there was no 130 news today, hence why I'm holding up to 122. I mean, yeah, invalidated, not much more to say on that. It was a 0.35% risk, and take profits were a bit ambitious, but that would have been a 1% gain. Put all my cards out on the table, and it gave me what I wanted to. NFP week, fuck it. I can't really say I didn't expect it. It's continuing to show bearish right now. Pretty shit way to start it.
So let's actually check those charts. I believe it's on UTC, so what time is it for him? 1:22. Let me pause and check those charts. Cool, so we're on the charts now. We've got to the exact moment. We're actually quite lucky because it was just with what we could read. So obviously you can see same charts. Oh, it's lagging now. Same charts. So the last candle we saw was the. Sorry about this lag, guys. Oh my. This last candle we saw was 120 candle. So it was this one right here. So as you can see, price broke this low, leaving this high. Then made this low, meaning we had equilibrium from this high to this low. And I'm not going to scroll on the lower time frames, but as you can see, price come up. It actually made new equilibrium right here. So it made a new low and a new high. This is our new low, and then it made a new high, and then we can see from here to here. Oh, is that the right one? Yeah. So it'd be from here to here if you was bullish, breaking structure there. But then as you can see, price makes a new low. Still keeps this high though. Makes a new low. So then we'd be looking here to here. price comes in. Obviously you've got the gap, and as you can see, that does break shut. No, it doesn't. On the lower time frame, there'd probably be a quicker break of structure than the 5 minute. So you could have probably had an order block here on the 3 minute. 3 minute candle out, bang. Stops can go from the fair value gap as it's a 3 minute candle out, and then we'll just round up to 5. Let me target a 2R. That would have got hit in one candle. And obviously you can see that ran about 13R. But yeah, I can't lie, I do get very carried away in these psychology videos, hence why it is 30 minutes long. You can't see me. Hence why it is 30 minutes long. Let's get some light. Yeah, hence why it is 30 minutes long, but yeah, I'll probably put in time frames for you guys to watch psychology or the reacting to a trade. Yeah, hopefully you enjoyed, and I'll see you guys in a bit. Peace.